Thanks for joining us at XM.com. This is a preview video. The latest data from the United States underline that the U.S. economy is losing steam. Now, will Tuesday's CPI report follow this trend? I'm Christina Marucos. With me today is Haralambos Pissouros, our senior investment analyst. Haralambos, markets anticipate the first Fed rate cut in June. Could the inflation report out this week solidify that notion?
Hello, Christina. Yes, after the disappointing ISM PMIs and the congressional testimony by Fed Chair Powell, investors have added back some basis points worth of rate cuts. And after Friday's employment report, they are now expecting interest rates to end the year 95 basis points below current levels, with the first quarter-point cut expected in June. The spotlight now turns to Tuesday's CPI data for February, with the forecasts suggesting that the headline rate remained unchanged at 3.1% year-on-year, while the core one is expected to have slid to 3.7% from 3.9%. Now, according to both the ISM manufacturing and non-manufacturing PMIs, prices continued to increase in February, but at a slower pace than in January, corroborating the forecast for the core CPI rate. However, the fact that the year-on-year change in oil prices turned somewhat positive lately supports the notion for a somewhat stickier headline rate. So, despite headline inflation not cooling, a further slowdown in underlying price pressures may add to Fed officials' confidence that inflation is moving towards their objective, and thereby it is unlikely to tempt investors to reduce their June rate cut bets. In other words, I believe that investors will continue expecting a first cut in June. In my opinion, for the market's implied path to be altered notably, we may need to see the actual figures deviating significantly from their forecasts.
And Haralambos, taking this into account, let's turn to the market reaction. We did see the greenback take a hit from Friday's NFP report. How can we see it perform on the CPI data this week?
The dollar could initially gain somewhat on the potential stickiness of the headline CPI rate, but in my opinion, such gains are likely to remain limited and short-lived, with the greenback resuming its short-term downtrend as investors remain convinced about a June cut, especially after Powell's remarks that the Fed is not far from gaining the confidence it needs to begin cutting interest rates. In my opinion, for the dollar to stage a strong comeback, the Fed may need to revise up its dot plot when it meets on March 20th. Although Powell sounded more dovish than expected last week, other policymakers have been vocal about their preference of fewer rate cuts than the December dot plot pointed to. What's more, both the University of Michigan and the New York Fed one-year inflation expectations are both resting at 3%, suggesting no material progress in inflation. Having said all that though, Atlanta Fed President Raphael Bostic is the only voting member who clearly favors less than 3 rate cuts, at least until now. So, although an upside revision in the Fed's interest rate projections at the upcoming gathering is not totally off the cards, it currently appears to be a hard task.
Haralambos, thanks so much. The US CPI report is out on Tuesday. This was a preview report. Thanks for watching at XM.com.